From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello. We didn't know who was going to say hello to you all first. I'm Nadine Blaney.
And I'm Juliette Zali. On a day, Nadine, where we thought we were going to have quite a lot of volatility, a lot of selling. We started that way. We were down more than 1% when I was on air at 10 a.m. But look, there's been quite a bit of a rally, you could say, into the close. And I was just saying on the close before the show, the close, that if you didn't have this big fall coming through in Fortescue and of course BHP today, I think the market would have fared a lot better.
Yeah, interesting, because when you look around the region, there's some pretty steep falls coming through in Chinese markets. The Hang Seng in Hong Kong, for example, just past 4 p.m. here in Sydney, to timestamp it for the podcast form, is off by 1.4%. We've got European futures as well coming under pressure. But yeah, I think that maybe I over-egged it for one of our key themes when I said ASX plunge.
Fortunately, we didn't.
Our ace producer fixed it up and said under pressure, which it is, because we've got so much still to come this week.
Yeah, absolutely. And I like that too, under pressure, given that a lot of it is these miners that are very much pressuring the market today. I mean, Fortescue is an incredibly interesting one with this block trade that went through. But Tectonic, another one of our themes, because you can't get past the big tech momentum. And I was talking to Chris Weston from Pepperstone, one of our favourites, earlier today, or everyone is our favourite, one of our old mates, I should say. And he was saying, look, Microsoft has really got to blow it out of the water or shoot the lights out for Wall Street to be excited about this. But you are starting to see that rotation go back again. You know, there was a rotation from tech to small cap, and it's starting to slowly go back this way.
So it could be a real tonic for the market if Microsoft does meet or beat expectations. And of course, we'll be listening for those key themes when it comes to AI, when it comes to the spend on AI, but also its enterprise business as well. I'm really looking forward to that one. So that will be just before market open here locally. Also before market open, we get Rio Tinto earnings results as well.
Yes, indeed. And we're going to be speaking to Clyde Russell about that at 11 o'clock tomorrow from Reuters. So that'll be really interesting. Inflation Nation, I mean, tomorrow, CPI. It is all about, we've been saying for months that this is the key for the RBA for August, that June quarter inflationary print. If it's too hot, what does that mean? Clifford Bennett, who was one of our guests on the last call on Friday, I mean, he was making some very, very interesting points that you are going to break a lot of people if there is another RBA hike.
Yeah, for that reason, the chats that I have had, most are saying the RBA does not want to be responsible for throwing Australia into recession. But Phil O'Donoghue yesterday, I mentioned it on this program yesterday, he reckons that the central bank essentially has to hike to take out what we've been given in terms of a tax break. So take it, you know, offsetting that fiscal stimulus. But he was keen to point out, like, that's only if this inflation read comes in a little bit hot. It only needs to be a little bit hot. And he pointed out that, look, this would be temporary because, of course, the tax cuts are legislated, so they're here to stay. But still, I feel for everybody, including myself, that has a mortgage.
Yeah, but I mean, you know, speaking for myself, aren't you just using that to pay your bills that have also gone up? So it's, you know, the chicken and the egg. All right, let's get to the sectors of the day and having a look at the miners. As we mentioned, it really was this near 10% drop from Fortescue over that huge block trade that went through. BHP, there was a little bit of a tie-up there with the Canadian company. Rio as well, ahead of its results, tracking lower by 1%.
Yeah, that's a pretty punchy fall for Min Resources as well, which was off by 3.6% by the end of the session. So tech, how did tech fare on a day like today? A little bit better. Not WiseTech Global, off by 2%, but Xero just flatlining it there. NextDC usually doesn't report until quite late in August, but there's been so much hype around, you know, this whole data center trend, around AI. And I had a chat with ST Wong, actually it was yesterday. I haven't been on air a lot today, but just, you know, there's some mild concern about the valuation of some of these companies on screen now.
Yeah, having a quick look at energy, we saw Woodside and Santos under pressure, but Cooper and Beach Energy tracked higher today. And then, of course, getting to some of the key stories that we're really following. I mean, here, BHP in Canada, Filo Corporation.
So all about copper. So 50-50 joint venture. RBC was reading some analysis there, Jules, saying that, you know, the proposed transaction right on strategy. BHP has been telling us forever that it wants to get more copper assets, and saying that it does provide BHP with medium to long-term growth in that space.
Yeah, Ramsay Healthcare was another interesting one. They've got the CEO retiring at the end of June. Natalie Davis, so you saw that on Reuters today, both two red headlines, Natalie leaving Woolworths, Natalie going to Ramsay Health. So she will be the new CEO from October, I believe.
Yeah, apparently she was in line. She was a candidate for the CEO role at Woolworths, which she didn't get. E&P, some analysis there saying that it lists management changes as a key earnings risk for Woolworths. So there you go, a bit of change in the C-suite.
Yeah, a lot of updates from companies today. IGO as well. It reported high adjusted earnings of $88.2 million in its latest quarterly update.
Yeah, Perseus Mining as well. We've had a lot of these quarterly production reports keeping us busy before the peak of reporting season, but Perseus, pretty strong quarter, over 120,000 ounces of gold. Those gold miners have been helped along by the price of gold as well.
Yeah, and the stock of the day, Credit Corp, this was incredible, up 15% at one point, I think. Guidance coming in within analyst expectations. We had Rudy Philippet Van Dyke from FN Arena and Francesco Destratus from Ord Minnett on the call.
I think we can conclude that because the share price has weakened quite a lot, that it wasn't as bad as feared, and that's why the market is up. That's why the share price is up. It's becoming, because locally it's not going well, it's becoming increasingly an American story, and of course that goes beyond just simply buying debt ledgers over there. It's also about competition, all of that.
Looking at our recommendations, we're on a hold on this as well, but you know, again, even if I owned it, I mean, to me, this is an opportunity to say, let's move on. You know, not,
so you'd sell into the rally?
Look, yeah, even though we have a hold on it, if you're a long-term investor and you've been holding it for a while, that's fine. But I think there's better opportunities out there in the marketplace that, that you know, if you see an opportunity like this, sometimes it's move on and let's go and have a look for something else.
All right, welcome to the COB, Scott Phillips from the Motley Fool. Scott, how did you view today's trade? Because we started off very shaky, but you know, we haven't finished off too badly.
Yeah, it actually was a better result than most of us expected, I think. It was a funny one too, because we had a reasonably flat lead from Wall Street, but we knew resources were going to remain under pressure, as you've summarised, and that's kind of the key part of the story. Frankly, some of them did remain under pressure, but there's a little more confidence elsewhere. Coming into tomorrow's inflation conversation too, a very, very interesting way to finish off a trading day. Not often we get more confident coming towards the end of a trading day before the release of some very important inflation numbers, arguably the most important this calendar year.
Okay, so when 11:30 hits tomorrow, Scott, I mean, we all can have an opinion as to what the RBA should or could do. But the reality is that the Australian economy hasn't slowed. The supply-demand dynamics haven't been doing what the RBA wants them to do quick enough. So what does that mean for upcoming earnings? Because, you know, the economy's still been going quite strong.
It's going to be really interesting, right? Earnings season saying, I say this most of the time, I guess this is the world we're in. I say this is going to be a fascinating earnings season, maybe the most fascinating for a while, and yet here we are again. I'm going to say the same thing. Think about we talk about earnings season, about the market, right? And we get the summary of the market all the time, but what you guys do on ausbiz a lot is dive below just the headline numbers and say, what does it mean for this industry, this company? And that's kind of where we see the rubber hit the road. Resources largely unaffected. We've seen most of the production numbers there, or there are some concerns about the global economy, which is seeing oil prices in particular start to tip away. But think about the other parts of the economy. What does it mean for tech relying on money from venture capital, relying on consumers to spend or businesses to spend? What does it mean for those businesses who are largely and often discretionary consumer spending, for example? That's going to be the most fascinating one, right? Because we get to see, yes, the economy is too hot, but we know from retail sales numbers, we know from GDP numbers, we know from inflation numbers that money's not being spent equally across the economy. People are pulling back hard on discretionary items, but still spending up where they have to. Energy, insurance, staple retail, you know, Woolworths, Coles, that sort of stuff. So thinking about where the money's going to be spent, how it's being spent, and also how much discretionary spending is left is really, really important. Obviously, we talk about earnings, but we kind of often know the earnings or companies have provided guidance. Then we turn ourselves to the outlook statements they give. And that's in two parts. What's happened since June 30? By the end of the month, we're going to be talking about 2 months worth of sales and maybe even some headline profit numbers for the first 2 months of the current financial half that we're in. We're going to see them talk about the future. There's going to be AGMs, of course, coming up thereafter, and more of that. So attention turns pretty quickly from where have we been to where do we go to next. And again, that puts kind of tomorrow's inflation and then Tuesday's RBA decision in very sharp focus. If they do end up with numbers that are uncomfortable, if they do decide they feel like they have no choice but to raise rates or not, it's going to change the way we spend, the companies that survive or don't. We've seen, significant bumps in retail insolvencies, construction insolvencies. We've seen Mighty Craft the brewer go broke. We won't see the last of those. Rex, of course, in a trading. I mean, there's so much going on economically right now. The winners and losers of this earnings season are going to be fascinating to unpick.
Yeah, incredible as well when you look at a conglomerate like McDonald's posting its only drop in global sales as well, with people not even, being able to afford a Big Mac.
And Carl's Jr. here in Australia going into administration overnight. I mean, these are big. So it was always a beachhead business. It didn't do particularly well. Taco Bell, I presume, is on its last legs here as well. Second time around, it's trying to enter the market. So you've got competitive dynamics. You've got consumer spending more broadly. Macca's talking about they'll do whatever it takes. That kind of almost war rhetoric of we're going to have to find a way to get customers back in the door. Margins are going to come under pressure. You asked about earnings season. Margins are going to be a huge part of this one. Mm-hmm. Companies that have increased their sales, is it because of volume growth or just passing on more costs? Companies that can't pass on those costs and have to absorb them, where the pricing power sits in the economy, who's paying, who's receiving, who's able to withstand it. We're going to really see, for the first time in a while, COVID was a big deal, but it was kind of a really weird time. Plenty of money thrown around by governments. It was kind of, Clayton's recession of sorts. We're not in a recession this time. We're in a per capita recession, by the way, and have been for a year. But we'll see this time, I think, which companies really genuinely have pricing power. The things we normally learn in economic cycles in downturns, I suspect we'll find out a lot about in the month of August.
Can't wait. You mentioned competitive pressures. You mentioned, some companies falling by the wayside. Well, look at Rex Airlines. I mean, do you think that this could be the pin dropping, that the government starts to potentially open up the airways for further competition? Or, is Rex... Well, it was a regional airline that, struggled and has done for so long.
Do you know what's interesting too? We've seen Bonza go broke on the back of trying to fly region to region, which is always a really questionable strategy, but what it proved was there wasn't enough flyers. I was on Twitter earlier today and talking to some people, including one guy who's recently retired after running a farm in Queensland, a few hours north of Brisbane. And he was saying, when we talk about, I say we, most people watching this and doing this are in a city or near a city. I'm in the Southern Highlands, but close enough. When we talk about a downturn, right, we feel the downturn in the capitals. And yet, these are the places generally with the highest paying jobs. They're the places that immigrants tend to settle. We've seen immigration be a really significant part of population growth and keeping GDP high. He's saying when you guys feel a bit of a pinch, think about the bush. Think about those areas that the shops are shutting, they're already moving to the cities anyway. The bush tends to feel it harder in a lot of these cases when we don't have the benefits of some of the growth in the cities and the CBDs, not the CBDs themselves, I suppose, with working from home. But think about, Metro Australia, regional and rural Australia doing it even tougher. Then think about Rex as an airline. Where are they flying to and from? Yes, to the capitals from the capitals, but to places like Dubbo or Mudgee or Orange or Broken Hill, Toowoomba. These kind of places, they're big cities in themselves, at least in regional contexts. But if those parts of the national economy are doing less well than the cities, they're probably already in recession or close enough to it. So we're seeing an airline story. We're seeing a regional Australian economic story. You're right about what does it mean for other airlines. I don't know that the Cathay or Emirates want to fly from Broken Hill to Melbourne anytime soon, but the idea of, we absolutely need more competition in the airlines. We know that. We're past the time, I think, of having a proper flag carrier of any reasonable sense. Qantas, Virgin, Rex, they are at the behest of shareholders, and they should be, but there's no reason why they should be provided with extra protection from competition, given there was no national airline, there was no nationally owned airline or government-owned airline. It's a free market. They might as well, the traveller might as well get the benefit.
Oh gosh, I miss Cathay when you say that. What an amazing lounge that is in Hong Kong. Yep. Scott Phillips, just dreaming of a life gone by. Great to chat to you from the Motley Fool. All right, well, of course, we're looking ahead to some of these big tech companies that are going to report tonight, but let's get to the leaders and laggards in today's session.
Okay, so let's see what led this market higher. And we've got Credit Corp. So that was sort of the first cab off the rank, if you want to call it that, in the reporting season. Pinnacle reports after the market on Thursday. And of course, we've got Rio Tinto tomorrow morning. IDP Education up by a pretty solid 4%. It has got Goldman's and Macquarie's predictions for the August reporting season, I think, behind it there. Also, UBS read a great reporting season note from UBS today. They reckon that Breville could be an upside surprise and beat on earnings outlook as well.
Excellent. Let's have a look at the laggards today. Fortescue, we touched on that block trade. Some weakness in Arcadium Lithium. Audinate was also one that we had an update on, falling by 5.6%. Bellevue Gold down 5%, and IGO.
Interesting. Audinate, it's in relation to a note from Macquarie, which has said that its recent growth increasingly looks cyclical rather than structural. Well, that's really interesting. So that'll be one to watch, because 88 was also on that UBS potential surprise to the upside list. Small cap. Now, I know that Findy yesterday had a terrible day on market, up by about 11% today. Frontier Digital Ventures is not on this list because it was only up by about 2%, but it did have a good move off the back of its quarterly as well.
All right, to the downside in the small end of town. Oh, Airtasker, I just used them. 8.3% lower. Bowen Coal down 11.6%. Actinogen Medical, Frontier Energy. What is Black Cat Syndicate?
I don't know, but it is intriguing, isn't it?
Yeah, I might look that up while we look at what's going to happen tonight, which is, of course, we talked on these earnings like Microsoft, AMD, you've got Pinterest, Pfizer, Procter & Gamble, Starbucks and Merck.
Is always a good one as well. Also because they comment on China, and as we know, the Chinese consumer is really struggling. Also that US jobs report, so we're expecting to see further easing in June, so that could be an indication that there's a bit more balance returning to the labor market, and obviously the extent to which this will impact consumer confidence remains to be seen, but we'll find out tonight.
And I think it'll be interesting to see whether Starbucks is seeing a similar move to Macca's as well, to McDonald's, or Mickey D's as they call it in the US.
My family and my Canadian friends just find it amazing that we call it Macca's here.
Yeah.
And like it actually says get a job at Macca's on a sign. They were like, what?
Yeah, they all say Mickey D's, don't they?
And tomorrow it's a big one here. We know that. We've got the second quarter inflation read at 11:30, so we've assembled a panel to discuss it all live as it happens.
Pat Bustamante and a currency specialist.
Yeah, all right. Well, we're looking forward to that one. We get retail sales month on month, so look into the consumer here. Rio's earnings, as we've mentioned, Champion Iron, but that doesn't happen until 11 p.m. Sydney time, because they're actually reporting in Montreal.
Okay, interesting. Now, if you were going to guess what sector Black Cat would be in, what would you guess without looking at my screen?
Mining.
Yes. It's a gold explorer. So there you go.
They call it Black Cat? Now
I don't know.
Have to look.
The black gold? No, that's oil, isn't it? All right. Okay. So
Speaking
the market
of oil, it did ease a bit through the session today ahead of the European Open. I think there's just also one thing we haven't mentioned is 3 central bank meetings coming.
Oh yeah.
So the FOMC, the Bank of England, and the Bank of Japan. So there's a little bit of reticence in markets to take on big risky positions ahead of those events.
Yeah, Sean Hickman today feeling very smug that he locked in his yen about a week ago. Very smart man. Anyway, the market is down by about 0.4%, so a lot better than what we expected and what we saw on the open. The ASX 200 down 0.5%, 40.7,950. That's a nice round number. And again, as we talk about the weakness that you've seen from Fortescue, from Ramsay on that change at the top, and from ANZ on that broker downgrade from Morgan, you take that away, I think it would have been a much better session.
I love your optimism, Jules, but I will say that US futures at this stage are looking a bit weak, and of course we've got commodities under pressure, so we'll see what that means for our local market tomorrow when we do it all again.
We'll see you from 9:45 Eastern.